Welcome everybody to another weekly market update. This is Sunday, the February the 18th, after the market closed on the 16th. Here's where we check in looking at the big picture of the stock markets. We can see how we're in a bull market, we're in a bear market. We want to protect ourselves from another big dip that cuts your pension in half and affects the entire economy. And also for trading, short-term trend, we want to be in flow, aligned with that trend. And just because, one of the biggest lessons you can have is that not just, for investing and all the rest of it and your pension, your nest egg, but, for trading, how the overall market affects your individual trades. It's very important to be aligned both with the long and short term. So this is a weekly chart going back to 2014, 15, 16, 17 into 18. Over here, each of these little up and down pegs is the week by week action. And they kind of smooth things out with these averages here, like a moving average of 70 weeks and 40 weeks. So here's the bull market that began back in November 2016 that my proprietary system predicted would happen, and hasn't got us out yet. It's been a long run without any significant correction until just lately, and that only happened as I've been commentating because things just got so overblown. And now we can see a week later this bounce. All you can see is that really all that happened, here's this line I've drawn here to show the trend line. All that really happened was, as I've been saying, is that this just went too far, too fast, way out of trend, and it corrected back to trend. It looked like it was going to be closed for a while, and I had warned about, if that got too far, but this last week it bounced just as hard back as it went down. In fact, if anything, that's quite a dramatic bounce back there. It would be nice to, I was hoping it would settle down a bit more, but that's a very bullish thing, a very big bounce. And just as I haven't changed my stance since November 2016 in saying that this is a bull market, and I'm not going to change it now because the uptrend has not been violated. Let's look at the daily chart here. This is what happened day to day over the last 6 months, and we can see in more detail here the drop that happened, and I warned that, as we could see, as we ended last Sunday when I spoke to you, we were about here, and I was just saying, okay, that'd be, if it doesn't go any further, that's fine, and it did just the right thing. In fact, every single day this week was an update. If I had to criticize anything, I'd say I wish this volume would be a bit more, because it sort of went on lowering volume, and it closed the week a little bit at the bottom of its range there. It's kind of like midway. It needs to sort of consolidate here at least, and get back above the 50-day moving average, which is this blue line, and hold position. But it's back in trend. When I said last week we're in a downtrend, I had to call it a downtrend, but purely because of the position this was in, below the 50 and so on, and expecting it to consolidate. But exact opposite happened. It just went straight into an immediate uptrend, which was pretty dramatic bounce there. Hoping that it doesn't. There's still a possibility that this could meet sellers now, or people who wanted to get out last time. That might have been the start of what you saw there on Friday. It's not out of the question, this thing. It's not out of the woods yet that it does kind of have another go at this and then come back. So I'm going to go with a neutral. I don't really have enough to go on to say up or down trend right now. The RSI is around 51% as well. I'm going to say neutral stance for the short-term trend, and this is a bull market. So that would mean that any open positions I've got, fine, I'll let them ride, but I won't be opening any new ones with stocks anyway. So I will speak to you next time, and I'll speak to members in the other video.